welcome to this special broadcast. I'm Stacy Pereira and joining me is Latha, Venkatesh, and we're here to discuss the FOMC decision, which will be later, coming out later tonight at 11:30 p.m. India time. But a lot is riding on that, Latha. We've had a lot of macro data that has come in through the week, mostly positive cues that we've seen, but this one is going to be that changer. We can expect that. So what are we likely to see from the FOMC? What is the stance Chairman Powell is going to take? What are you hearing?
Well, if you looked at the CNBC survey or you looked at the CME Fed Watch tool, these are the ones that give us the futures indication. The market's clearly pitching in for a pause, or the fashionable word now is to call it a skip. Which is pause would mean a longer pause, whereas skip means only this meeting they are skipping. So a lot of people have now shifted from pause to skip because they don't think it's going to be a long pause. But be that as it may, the latest data that we have got actually encourages more people to expect a no rate action policy on Wednesday night for us, because the CPI numbers have come in lower than expected. There is one sticky point in terms of the core inflation, but nevertheless, it gives enough comfort to the Fed to wait it out a bit, because the month-on-month increase is 0.1. Now, if it is 0.1 every month, then it's only going to mean an increase of about 1.3% over the year, which is something the market can live with. But core rose at 4.8%. Sorry, 0.4%.
Right.
Now, 0.4% every month would mean a near 5% annual. So that is the sticky point.
Right. So there is some bit of relief, but maybe not for the long run, and which is why this skip is what we are looking at. So there could be a hike in the July meeting then, or like what is expected?
Well, again, let me go to the CME Fed Watch tool, which is again measures, whether how much of the market is expecting the rates to be hiked. In July, we have about a 59.5% of people voting, expecting a rate hike in July. Okay. And why is this 59 important? Because last week it was 50.9. So the number of people have gone up since the non-farm payroll numbers came in last Friday. So yes, July is still something people are worrying about. The majority is still indicating that there could be a hike, and that is why this is a skip and not a pause.
Right. And how are markets going to take this? Now, we've been seeing, at least for Indian markets, quite a good rally, some bit of consolidation, but also watching out for all of these headwinds, so to say. So will this decision, if it is a pause, will this further up the momentum, you could say, for global markets as well as for India?
Up the momentum, as in will it be bullish, you're saying?
Yeah, if for the rally.
Okay, the story, the connection between rate hikes and stock markets is a little fuzzy. Markets rise when interest rates rise.
Okay.
This has been proven to us from 2004 to 2008. The Fed raised interest rates 13 times, and 2004 to 2008 was the craziest, fastest bull rally that stock markets have ever seen. Again, as you noticed, from March to now, the Fed has raised rates 4 times by 75 basis, 3 times by 25 basis, once by 50. I mean, it's a 500 basis points, 500 basis point increase. Markets are higher than where they were before the rate hike. Because every time the Fed hikes rates, it is telling you the economy is strong. I have to pull it down. When the most conservative force in the economy is telling you the economy is strong, I want to cool it down, then markets, after a day's jitter or a brief jitter, actually rises.
Okay.
But you can't take this trajectory for the entire rate hike cycle. It's more so in the initial rate hikes, but as it becomes a mature rate cycle, chances are the markets will start worrying that now this one more will start percolating into the market, into the economy, three quarters, a couple of quarters from now. So maybe to 6 months from now, we are staring at a fairly steep slowdown.
Right.
So the reaction could be negative.
The caution has to be there, whether it's for investors in the market or for the policymakers, for that matter.
Short point, the pause initially will be welcomed. But I mean, the pause or the skip, if it comes on Wednesday, will be welcomed. but we will have to wait and see if it lasts.
Okay, let's look at how India has been taking all of this. So we had our own MPC meet recently, and that there was a status quo maintained there. But a lot of the commentary that came after that was that perhaps we're not going to see a rate cut, at least for this year. Will we be taking some kind of cues from the Fed then, and how their decision goes? Because if they perhaps just pause for now and then go into a hike, is that something that we could also see, and which is why that rate cut might not come for us?
Well, two or three things. Point number one, the Reserve Bank always maintains that they take rate hike or rate cut decisions based on domestic factors. Secondly, the US economy is a mother economy, and it can kind of move the needle for the global economy, and therefore even the Indian decision makers may not go in step with the Fed, but will watch for what that hike will mean for the Indian economy.
Right.
If the Fed is signaling that the US economy is pretty strong, wages are very high and the labor market is tight, then that is a message that India takes on, that
Right.
means the global headwinds will not be serious. It will be actually pro-growth, because they're saying that the economy is strong.
Right.
So these things will always be factored in, though the decision will be taken on domestic factors. A third point, RBI is not looking at a rate cut. If there was one message in the previous policy,
Right.
it is don't talk about cuts.
True.
Go ahead.
We did see that happening, and that was that. Like I said, that was the commentary that came out, saying that maybe we might see the cuts only come in the second half of FY24. That's
No.
or maybe an October one.
I think I must specify that India, the RBI governor, did not speak about rate cuts.
Right.
Every time we asked him, he said the answer was, our target is 4%.
Right.
Our target is 4%. And then when you parse it, their own inflation forecast for the fourth quarter,
Is high,
Jan,
high.
Feb, March of
Was
24,
higher.
is 5.2.
Right.
So if you are, RBI is not expecting 4% as of, March 2024,
Four.
you should be very clear that there are no rate cuts till March 2024.
Right.
If sometime during December they're able to forecast that after March we see the rates in a 4 handle,
Right.
then maybe in April you can expect, if they see one. Now even in April they're going to have the last number February.
Correct.
They won't have the April data, and February is going to be 5%. Now, unless
was
things
forecasting.
change drastically and it is not a 5%, 5 point something number, I would not factor in a rate cut at least in April.
Right. I think what the RBI governor had also pointed out were the other countries that were doing this pause and then either cut or hike kind of move. So what kind of views we've seen? I think Australia has done something like this. We just heard of China also that has come out and cut those rates. Give us a little more on that.
China is a factor by itself. They've gone through a severe slowdown, mostly state-induced, and therefore their loosening of the policy, their cut in the reverse repo rate, which they announced earlier today, was actually expected. People were, not by a large mass, but economists were saying that the PBOC will loosen. That's an exception. The rest of the economies that you referred to, Bank of Australia and more importantly Bank of Canada, both of them have raised interest rates after a pause. That is what made many people change the word pause to skip. They are not pausing, they're skipping one meeting. And the Bank of Canada statement is very, very crystal clear that we think growth is extremely strong. And when growth is good and demand is good, inflation obviously will not have a reason to fall because demand is strong. So the messages from these central banks is that we expect, that we are not done with rate hikes. And the Canadian economy is very closely linked to the US economy. That is why the day they announced rate hikes, yields rose in the United States. So we must not forget that both the CME, Fed Watch, the Bank of Canada statement are all expecting that the Fed is not done with cuts, that it is not a pause, for this cycle.
So end of tightening is not what
it's not something you can take for confirmed.
What are the other kind of commentary that we should be looking out for, especially when Powell gives his speech?
Well, the first thing will be in the statement itself. Last time they clearly hinted that series of rate hikes are not warranted. So we could sense that means a rate hike is not needed next time. So that's where we got the sense of the pause. So one would look for those turn of phrases, and I think he will be quite directly asked in the press conference whether the rate cycle is over. And John, we have to parse that statement, how well he couches it, whether he is hinting that we are not done. That is the statement you will parse a great deal
Right.
When he does his press conference.
Right. So I think there's a lot to look forward to in that commentary, whether they actually do this pause and then hike or pause and then cut. I think we're back to that will he, won't he era to say, but that is something that is going to keep everyone on edge, and we will be covering that very closely when Chairman Powell gives that speech at 11:30 p.m. India time tonight. So stay tuned for that. But I hope this was helpful in getting a sense of what we can expect from the Federal Reserve in their monetary policy.